evening, ladies and gentlemen. Welcome to the Mind Forum. I would like to thank the audience for attending this forum today. Hope you all in the pink of health. With me, Soffia Elysa binti SUHAIMI as a chairperson for today. Our issue for this evening is the rise and the fall of management accounting. First of all, let me introduce to you all our great panels for today's evening forum. All of them have a lot of knowledge and also experiences about this topic that we will be discussing. Our first panel, Professor ZULFA ULYA binti Muhammad FAUZI, who is an expert in the management accounting field. Currently, she is teaching at National Energy University, UNITEN. How are you today, Professor?
I'm fine, thank you.
Okay, move on to our second panel, Ms. HIDAYAH binti ROHMATIN, who is one of the experts that have done plenty of research in this field. How are you today, Ms. HIDAYAH?
Hi, thank you for asking. I'm doing well.
You're welcome. Last but not least is the very experienced lecturer of management accounting, Dr. SYARIFAH NOOR AFIQAH binti Syed Muhammad RAZALI. Welcome to today's forum. How are you today, Doctor?
Alhamdulillah, I'm good, and I hope all of you can gain some knowledge and understanding from this forum.
Okay, before we embark further, allow me to give a view regarding the issue of management accounting. Driven by the procedures and the cycle of the organization financial reporting system, management accounting information is produced too late to aggregate and too distorted to be relevant for managers' planning and control decision. Management accounting reports are a little help to operating managers attempting to reduce costs and improve productivity. The management accounting system fails to provide accurate product costs, manages horizon contract to the short-term cycle of monthly profit and loss statement. Today's management accounting system provide a misleading target for managerial attention. They fail to provide the relevant set of measures that appropriately reflect the technology, product, process, and competitive environment in which the organization operates. Financial managers often fail to recognize when the accounting numbers are no longer providing relevant or appropriate measures of operation. So first, we would like to hear from Professor ZULFA regarding the roots of management accounting.
Thank you to our chairperson, Soffia. First of all, thank you for giving me an opportunity to share with you guys some knowledge regarding management accounting. So now, let's get started with the roots of management accounting. The early management accounting measures were simple but seemed to serve well the needs of owners and managers. They focused on conversion costs and produced summary measures. The measured costs included labor, material, and also involved some attribution of overhead costs. The goal of this system was to identify the cost for the intermediate and final product of the firm and to provide a benchmark to measure the efficiency of the conversion process.
As Prof mentioned just now, the system started in the 19th century, right? Then how was the historic condition?
Okay, before the early 19th century, there were no levels of management and long-term salary employees in the organization. This is called a managed organization in which the owners or entrepreneurs conduct all businesses through market transaction. After that, as a consequence of the Industrial Revolution and the ability to achieve gain through economies of scale, it became efficient for 19th century enterprise owners to commit significant sum of capital to their production process. The owners started to hire workers on a long-term basis in order to gain maximum efficiency from their capital investment, which is called hierarchical organization. Hierarchical organizations then created a new demand for accounting information to determine the price of output from internal operations. Thus, the management accounting system was developed to support the profit-seeking activities of enterprises. By the middle of the 19th century, there were great advances in transportation and communication, especially the invention of the railroad and telegraph. They provide further opportunities for gain to large hierarchical organizations. These enterprises could now coordinate the acquisition of raw materials and the distribution of final product over much larger geographical area than had previously been possible. In fact, effective management accounting systems were necessary to coordinate efficiently the activities of these enterprises and to provide a summary of performance for decentralized and dispersed managers.
So, what are the best examples to prove effective management accounting system?
Okay, perhaps the best example of effective management accounting system could be found in the railroad corporations. Railroad corporations were the largest enterprises during the mid-19th century. New procedures were invented to control the receipt of disbursement of cash. The railroad also has developed extensive summaries of their internal operations and performance. Measures such as cost per ton mile were created and reported for each major segment of operation. For example, the operating ratio and the ratio of revenues to operating costs were developed to measure the profitability of the business. Furthermore, improved transaction and communication combined with economies of scale also permitted the growth of retail store chains such as Marshall Field, Woolworth, and Sears. These retailers have developed their own measures of internal performance to support their managerial planning and control activities. It is because these retail stores or distribution enterprises required information on the effectiveness and efficiency of their purchasing, pricing, and retailing activities. For these activities, measures such as gross margin and inventory stock turn were created. These two examples reveal that the management accounting measures were developed to expedite the management of process-type industries.
So, in other words, the measures were designed to motivate and evaluate the efficiency of internal processes, right? But Professor, as an entrepreneur, supposedly, should they be more focused on internal processes rather than focusing on gaining profit?
Yes, you are right. Personally, I could say that they should be a little concerned with measuring the overall profit of the enterprise. It is because when the internal processes were performed efficiently, then the organization could be confident that it would be profitable in the long run. Thus, the management accounting system was created to promote efficiency in the key operating activity of the organization. Next, further advances in the technology of management accounting system were made in conjunction with the scientific management movement. This movement started in metal fabricating companies during the last 2 decades of the 19th century. One of the scientific management engineers, Frederick Taylor, wanted to improve the efficiency and utilization of labor and material costs. Eventually, as I mentioned earlier, the labor and material costs combined with overhead costs were aggregated together into a finished product unit cost that could be used for pricing decision. Final development in management accounting system occurred in the early decades of the 20th century to support the growth of multi-activity, diversified corporations. The DuPont Powder Company was the prototype of this new organizational form. The managers of DuPont Company faced the problem of coordinating the activities of their diverse operating groups. Eventually, the most enduring management accounting innovation devised by the senior managers of DuPont was the return on investment (ROI) measure.
Wow, it's a very in-depth explanation from Professor Zulfa regarding the roots of management accounting. Thank you, Prof. Next, I would like to ask Ms. Hidayah, as an expert in this field, what are the challenges of the management accounting system?
Oh, of course, in management accounting, they have faced some challenges. For example, the vigorous global competition, rapid progress in product and process technology, and wide fluctuations in currency exchange rate and raw material prices demand excellence from corporation. However, they have the best solution to overcome this kind of challenges, and indirectly it gives improvement in the management accounting system.
Regarding your statement about the solution of those challenges, how to overcome them? Is it just focusing on some aspects that are only handled by a few people or something else?
Okay, thank you for the good question. To overcome them, an organization management accounting system must provide timely and accurate information to facilitate efforts to control costs, to measure and improve productivity, and to devise improved production processes. Not only that, the organization management accounting system serves as a vital two-way communication link between senior and subordinate managers. It means by which senior executive communicate to subordinate and decentralized managers the goals and objectives of the organization. In the reverse direction, the management accounting system is the channel by which information about the firm's product performance and product efficiencies get reported to upper level of management.
Is there any guarantee that excellent management accounting system can bring success in today's economy? How about if there is an ineffective management accounting system?
An excellent management accounting system will not by itself guarantee success in today's economy. Ultimately, success depends on products that meets customers' needs, on efficient production and distribution system for these products, and on effective marketing efforts. However, an ineffective management accounting system can undermine even the best efforts in product development, process improvement, and marketing policy. With an ineffective management accounting system, the best outcome occurs when managers understand the irrelevance of their system and bypass it by developing personalized information system. But danger lurks if managers do not recognize the inadequacies in their management accounting system and erroneously rely on it for managerial control information and product decisions.
Are there any opportunities of using management accounting system?
Yeah, with a management accounting system, all information can be recorded in real time for analysis of operating performance since many production processes are under direct control of digital computers. Furthermore, in highly automated environments, automated part recognition and tracking system combined with local area network technology can provide continuous status reports on working process.
I see. With nowadays technology, I think that the management accounting system has improved a lot than before. What is your comment, Ms. Hidayah?
Yeah, I couldn't agree more. Today's designers of management accounting system can use sophisticated electronic technology to devise reporting and control systems that are more accurate, more timely, and hence more effective than those designed by their predecessors. Thus, an extensive system now can accurately measure and attribute the resource demands made by each product in a diverse product line.
Okay, thank you Ms. Hidayah for the detailed explanation. It is clear, and what I can conclude from what Ms. Hidayah said before is that the challenge and the opportunity for contemporary organisation is clear. Management accounting system can and should be designed to support the operations and the strategy of the organisation. The technology exists to implement system radically different from those being used today. What is lacking is the knowledge. But this knowledge emerged from experimentation and can communicate. Okay, so now we are going to move on to Dr. AFIQAH. Is it said that in the virtual practice, management accounting has actually gone through an evolution?
Thank you, host. Sure, that is absolutely a correct information you got there. You see, actually in 1925, management accounting in virtual practice have been developed. For example, the cost accounts for labor, material and overhead, and also things like budgets for cash, income and capital. It has been evolved to serve the informational and control needs of the managers in the organization, which have been more complex and diverse. However, in mid-1920s, this evolution has stopped. Maybe due to how little incentive are given for this. This may be due to the influence by DuPont and General Motors, in which developed corporate organizational forms has proven how they can become the model for many corporations for the next half century.
I see, that is too bad. What may be the other cause of it?
Yes, very bad. With how the evolution stopped, the relevancy of the management accounting is at a loss, even without significant innovation in organizational forms. However, the diversity of products and complexity of manufacturing processes continued to increase in the decade after 1920. Even with all this, the evolution of management accounting systems after 1920 did not keep pace with the improvement in corporation product and process technologies. The other cause of it may be due to how the auditor is thinking of the matter. Auditors, mindful of potential liability to users of financial statements, preferred conservative accounting practices based on objective, verifiable, and realized financial transactions. This means when measuring cost of goods sold and valuing inventory, auditors insist on product costs based on historical transactions recorded in the firm's ledger accounts. Considered also on how they wanted the income statement and balance sheet to articulate. This leads to them preferring simpler methods. Aside from that, the distorting effect from using simplistic methods to attach cost to product may not be as severe, and the cost of collecting data and providing from records to production managers may have been too high at the time. But that's not the case now. To them, the benefit from a more accurate and more responsive management is not as worthy as the cost of maintaining such a separate system.
Wow, such a nice sharing. And nowadays, is it a must for the management accounting to have an upgrade?
As years goes by, things are not the same as the old days. Corporation product line expanded, production technology changed, product life cycle shortened, global competitive conditions shift, and great advances in information technology occurred. As such, it is naive for us to assume that the old management can be practiced as it is without any enhancement.
That sure means trouble. Perhaps could Doctor please explain what the effect of this lost relevance may be?
Okay, this lag surely brings us to many problems which can be seen nowadays. It may cause distorted product cost, delayed and overly aggregated process control information, and short-term performance measures that do not reflect the increases or decreases in the organization economic position. This stagnation may also be attributed to the dominance of the external or financial accounting statements during the 20th century.
That is a lot of information that we have gained from you, Doctor. For the next question, I would like to ask, why did the university-based researchers fail to note the growing obsolescence of organizations' management accounting system?
About that, we believe that the academics were led astray by focusing too narrowly on a simplified model of firm behavior, influenced strongly by economists' one product, one production process model of the firm. Management accounting academics found little value in the cost allocation imposed on organization by financial accounting procedures. The cause may be due to the literature that has emerged for 60 years advocating the separation of costs into fixed and variable components for making good product decisions and for controlling costs. The writing focused deeply on simple one-product settings used by academic economists and accountants, but never fully addressed on the question of where fixed costs came from and how these costs need to be covered by each of the products in the corporation repertoire. Aside from that, researchers attempt to implement their ideas in the environment of actual organization, with hundreds or thousands of products and with complex, multi-stage production processes. The literature focuses on elegant and sophisticated approaches to analyze, while companies try to manage with antiquated systems in settings that had little relationship to the simplified relationship assumed by the researcher.
I understand. So it's very important for the researchers to properly conduct their research based on facts and not just assumption. Thank you, Doctor, for the well explained. So I can conclude that in the virtual practice, management accounting has actually gone through an evolution. Okay, before we end our evening forum, I will conclude that there is a rise and a fall of management accounting. Starting from the roots of management accounting that are shared by Professor NOOR ZULFA, there are also challenges that can be seen in this field. Ms. Hidayah also shares the solution to the challenges and the opportunity. Finally, we have Dr. AFIQAH, who occupied us with the effect of lost relevance and the reason why university-based researchers fails to note the growing obsolescence of organizations' management accounting system. Thank you to all the panels. A lot of knowledge we could gain today thanks to the well explained from the panels. Okay, we have come to the end of the Mind Forum. Thank you to the audience that stayed until the end of the program. We hope that you all can gain knowledge from today's forum. Stay tuned for next week's forum with me, Soffia Elysa, SUHAIMI, as your chairperson. Thank you. See you next week.